Welcome to the market recap presented by Tactical Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 17th. It is a Wednesday, the 17th of April, that is, in case you are curious. It is a Wednesday, a little bit more of the same, almost a repeat of yesterday, really. Got a gap up on the open, kind of drifted to the downside all throughout the rest of the day. Not a major close one way or the other, but not able to generate any momentum. You had healthcare continue to get beat up as it continues to just suffer tremendously. A lot of, unless you're a bear, then you're probably enjoying the healthcare sector, and hopefully you, at least you're not a bull, hopefully. Real estate continued to sell a little bit as well, and everything else kind of just holding its own. So there you go, Em. There you go. Yeah, yeah. It was rough, and to put it mildly, it was rough in the healthcare sector, and it is. I mean, it's everywhere. You know, there's a few that were able to close in the green, but very few. It was ugly, and I have a hard time seeing it getting much prettier in the short term. So hey, Scott, hey, Lorena, hi, Micah, good to see you guys as always. I hope you had a great day, and our one day, got one day to be ready for the holiday weekend. I hope you have some exciting or nice, and if you're me, boring plans. My holiday's next week, NFL draft. That's my holiday, and so I'm going to get work done this weekend so I can be really lazy next weekend. So, but before we get there, we do have a little bit of earnings coming out. Now, we had some earnings stuff going on today, right? You had Netflix. Nobody knew what to make of that. It moved a lot, but it didn't really go too far one way or the other. IBM down, you had Pepsi up, you had a few other stocks, BK down big today. You had all sorts of crazy stuff going on. KSU actually broke above on a decent report, broke that resistance that we were looking at last week. So, I mean, we're in it. We're in earnings season. Now, with the holiday week, it looks like this is going to wrap us up. The reports tonight. I did my quick check before the market was closed for tomorrow morning's earnings, and nothing on the schedule. But tonight we have E-Trade, we have United Reynolds, we have KMI, we've got Alcoa. So we have a few, not the names that we had yesterday, or this morning, but a few S&P 500 companies are coming out just to illustrate how crazy of a day it was in healthcare. If you look at the first page of the S&P 500 losers, everything is healthcare with the exception of BK. People did not like that earnings report, gapped right below support. But other than that, Alexion, DaVita, Edwards, I mean, some of these things too, we've talked about it a lot. Some of these things, just as recently as a couple weeks ago, were in upward trends. Yeah, it wasn't the healthcare plans, we knew that, but I mean, it's pretty much across the board. And these are some big moves on some of these stocks. There is no doubt about it. So healthcare continues to be under a tremendous amount of pressure. And hey, Lloyd, hey, Ed, good to see you guys. It really was a lot like yesterday. Yesterday, we had that gap on the open. Here we are on the S&P 15-minute chart, and then just kind of a drift down, little bit of a rally at the end of the day. And the exact same thing happened, a little more volatile, I guess you could say. I wouldn't say anything tremendous, but gap up on the open and a drift down and a little bit of a rally at the end of the day. I don't know if that means we're running out of steam and should expect that pullback to begin, or if it means that traders are unwilling to let it even go bearish for a whole day. I'm not sure what to make of it, to be quite honest with you. But what I am sure of making, at least for the time being, we're still above everything. We're still knocking on the door of that all-time high on the S&P 500. I have my first level of support at this old resistance, at this 20-period moving average that puts us right around 2860. So a pullback into that ballpark, I'm not going to complain. I wouldn't think it was a bad thing whatsoever. And quite honestly, I'm kind of pulling for it at this point in time. Not a whole lot, a little more bearish, definitely a little more of a bearish feel to today's candlestick, but hard to be too crazy because, hey, we didn't even test the 9 EMA. So those short-term averages still holding up on the S&P 500. Over on the NASDAQ, we actually kissed a high today. We didn't hold it. We weren't able to sustain it, but ran all the way to 77.15 for the high of the day as it continues to just do what the NASDAQ does these days, apparently, and that is go up, regardless of why or why not. It just goes up. So oh, you got got a condor on IBM post earnings. So yeah, IBM's not tremendously. I mean, you never know for sure, but they are not known for their volatile movement, on a normal day-to-day basis. So I could understand where you're coming from there, Scott. So things are still looking good in the NASDAQ. I mean, you hit a new high, not closed it, and so you can't give it the gold star, but was able to hit it. We're still above everything. I mean, again, are we hoping for a pullback? Probably depends on how bullish you are in your portfolio right now. From a new trade perspective, hey, who wouldn't mind a pullback, right? Another day, no reason to think it has to happen tomorrow at this point in time. But if it is going to happen, fighting at that resistance level, that all-time high level, is as sensible a place as any in my mind for that to be where it does get at least a little profit taking. With as strong as it is, I would have a hard time even banking on that happening. Over in the Dow, not a lot to see here, closing very, very flat. Doji day, again, just like yesterday, not a lot. When we look at the broad market, we look at the RUTs a little different, but we look at the big indexes and it just is a little bit more of the same. Not a lot has changed in the Dow Jones. We still have a little bit of room to go before we test those all-time highs over there. Little bit behind maybe the S&P, which is a little bit behind the NASDAQ right now. But again, hard to say anything too terribly bad about them when your biggest complaint is, I wouldn't mind a pullback. I guess you don't have too many problems. Then you have the RUT that really got pushed down off of that resistance. We watched this fight for the last week approximately, and today was finally the day that we saw some folks give up that fight, at least for the short term. Now we've got lots of support in the very close to us, in my mind, on the Russell. We have this recent swing low down here. We have our 20 and our 50-day moving average here as well. So I would expect this 1550, 1555 area to kind of be that support zone for the Russell. If that breaks and gives out, that might be short-term a negative thing, or a positive bullish, bearish thing, depending on how you want to look at it. Now, I'm not expecting that to happen necessarily, but if we do take out that support level, we've taken out a swing level of support. I don't think that's a primary support zone, but it clearly is a support zone, and those moving averages, and not a lot of support till we get back into that 15-20 range. So my first level, and I'm going to just kind of keep doing what I'm doing with the RUT, just looking, just kind of saying, do you? Yeah, exactly, Scott. And I'm fine with that. I don't need the RUT to be moving a lot. I know many of you are probably cash flowing the RUT in condors. So, I usually, if I'm going indexes, I'm cheering for moves in the bigger indexes. I usually am hoping for nothing in the Russell. So we got a little bit of a range developing here. Obviously, this resistance, it has turned out to be at least a little something. A break beyond that, like I've said in the last couple of days, I think it's not hard to get to 16 if we can do that, but we've got to get back there now. So keep an eye on those averages, keep an eye on that swing low, but really I wouldn't necessarily think bearish there, more so more neutrality on the RUT, which for the most part is where I am. I'm waiting for it to break that 1605 before I start to have much of a directional bias on it. So pretty dull day unless you're looking at the RUT, and even that's only relative, right? So somebody had to be interesting on an index level. And most of the sectors are going to have that same vibe today too, where we gapped up on the open and then just kind of drifted. Some held up better than others, but the general play of the market was really this: gap up and drift down throughout the rest of the day. And ultimately, that's not a bad thing. It wasn't going to be able to cheat today, at least. Really, a lot of movement, but we're kind of right there still knocking on the door of that breakout over on XLB. So again, we broke on the intraday, but you guys know me, I always want to see that close as confirmation. Clearly didn't get that in my estimation here today. I'm still looking towards it happening personally, but Still hasn't happened here today. We're starting to get that 9 EMA and that resistance level to get awful close to one another, which is going to force the issue, at least short term. Either that short-term average will kind of help propel it, if you will, through that resistance, or it will pull back and break below that, maybe giving us a little bit of a deeper pullback. But right now, hard to tell either way, I think. Still have to like what you see, I think, in the material sector, still knocking on the door. Hopefully, this is what tomorrow looks like. I really hope we're having a very similar conversation tomorrow. I don't really want a whole bunch of breakouts on Thursday before a 3-day weekend. I'm going to ask the Easter Bunny for that. I don't know if he's going to give it to me, but it doesn't hurt to ask. Very similar over in energy. Gapped up on the open, drifted down throughout the rest of the day, still holding up. We're now starting to get a little bit of a pinchy vibe, here between, we've got that old resistance at around $69. That's kind of looming above us, that 200-day moving average. And we don't have a lot of room all of a sudden. We're running out of a lot of room between our 67, that kind of that primary support zone, and that resistance zone at approximately $69, the 200 at just shy of that. I still like it, still maintaining as long as we're above the 50. I am leaning to the bullish side of things. And like we've kind of talked before, it just seems like it wants to be choppy. And I wish that wasn't the case. I much prefer when things are nice and well behaved, but still feels like it's really, really choppy. I still like it, going through into the rest of the month and even into May, as long as we're obviously holding up this trend and holding that 50-day moving average, but not a lot to report here today and not being as well behaved. The nice thing about the break last year, I mean, it took a while. It did. It took a while to break out last year about this time. But when it did, it just went. And it was so well behaved and so nice and made it so easy on us. This time is trying our patience and our technical skills because, that is not the case. We're staying above the moving averages. We're holding our swing low. We're above the 50. Lots of things to like, but it is very choppy. It certainly has been as of late. Financials, Goldman Sachs had a nice day, actually a nice little pop on Goldman Sachs here today as for the most part, traders are feeling pretty good. Morgan Stanley came out with a pretty darn good report in my mind here, which kind of helped this out. And one of the reasons I've been staying away from this sector this week is because of the impact earnings can have. Now, they've had a pretty positive impact from a bullish point of view, but we've seen this week, over in this sector with so many of the big names reporting, and for the most part, it's been fairly positive. I mean, you have BK, who is the opposite of that, but most of the big banks have had somewhat respectable responses to their earnings, even though I think their earnings are kind of mixed, not good or bad, really. It doesn't matter what I think, certainly not to the market. We're still right there at that resistance level. I don't think you can call this a break at this point. At least I wouldn't call it a break at this point. A lot of movement back and forth. And if you actually look at the intraday on the financials, you saw a little bit more strength. We had our drop, our pop and drop early, but then we double bottomed and really ran throughout the rest of the day to the upside. So we were seeing a little bit more strength throughout the day in the financial sector here today than most of the other areas in the market. So I think you have to tip your hat a little bit. It seems like traders have, been pretty satisfied with the earnings overall within the sector. We're still going to have earnings within this sector coming out, but we've got a lot of the heavy lifting behind us now as we work in. Now we're going to start running into some other sectors having a whole bunch of earnings. So really, resistance continues to be the main area there. If and when we can take this out, honestly, I think 28 is kind of that next level that I'm going to be looking at in that general ballpark. We've got just some history, going back, a little bit of consolidation. We've had it act as a support zone. So there's not a lot of clear levels of resistance, maybe even into 29, but I'm not comfortable saying 29 is the next stop. If we can break out there, I'm going to need to take a little smaller steps in the financials. Over in industrials, we gapped just like the market, and we cheated a little bit, carrying on that momentum. Yesterday, we were kind of right on the verge, depending on how you define things, of either breaking that 77 zone or not. But I think today we can say that, yeah, we did. And while the candle isn't beautiful because it basically did what the market did, it sold off throughout much of the day, it did hold that resistance level. I am going to say that that is a positive development personally, not necessarily specifically has to be for tomorrow, but as confirmation that there is more room to run to the upside in industrials. I am using that as kind of a feather in the cap of the industrials right now. I expect honestly it to work into that $80, and I don't expect it to do that in a few days, although that would be okay if it wanted to do that, I guess. But I do expect it to continue to run. I think at this point in time, it's probably pretty safe to mark this recent swing low at $75. We've used it as support and resistance before. I think now we can say that that's a pretty significant support level. We came off of it. We broke resistance off of it. I'm comfortable saying above 75. It's bullish on the industrials right now. That also just so happens to line up with about all of our moving averages minus the 20 SMA and a pretty major level of support. Probably couldn't argue, make a good bearish argument to me, at least today, until we're below this support level. So, 77, 80, 75, and this 73 are kind of the numbers that I'm looking at, certainly still looking at it from a bullish perspective. And of course, how can you not look at technology from a bullish perspective as they just continue to, it's just crazy how much it doesn't matter what's going on around them. They continue to march up. So all-time high on the ETF, check. Above all of the moving averages, check. Many of the components within the sector hitting highs and in these great looking trends. So, it's really just how are you looking to get in my mind, as opposed to should you be looking to get in, just continues to show an absolute ton of strength. We had some pretty decent strength in the staples today too, led probably by Pepsi. Pepsi had a pretty decent report and certainly a very nice response to that report, breaking through a little bit of resistance on the open and closing at an all-time high. Continues to be a very solid area in my mind. And all of a sudden, just like that, we are dealing with those all-time highs. So or not those all-time highs, but those recent highs here. So let's take a look at this on a weekly time frame, because we're knocking on the door. Would make sense anywhere in the very near future for this to be a little bit of a profit-taking zone to me, whether it's consolidation or a pullback. That would be the most likely thing to happen, in my opinion, or I don't know that is what's going to happen, but that would be what my expectations were. Beyond that, we've got room to go. We really do. We have a little bit, but I'm not overly concerned about this 2-day, at 57.20. We'll deal with it if and when we get there. Really, if we can clean out of this 57, I don't really see why we aren't pushing 58. These charts are still looking fantastic to me for the most part. I still really like the way the individual components of this sector are looking. Maybe we need something to, maybe we need a consolidation or a little bit of a retracement to give us a little reset for some reentries. But if we can push through that 57 area, I really expect this run to continue. And I honestly think it's going to give it a good try. These charts are just we've looked at them a lot. They're just so strong, at least to my eyes they are. That's my read on them. So still really liking it. We've got a challenge. We're going to have to deal with this. Maybe it's not going to be a big deal, but I think we should probably assume that this is going to be a little bit of a fight. But a really solid day in the staples. Not so much in the utilities. Hasn't really done anything but hanging right out at that 50-day moving average, closing just a hair below it. Just continuing to look at this from a neutral perspective. Still think above 57, you can't make a strong bearish argument within the sector. But I think you could start to make a case that, if it does break, what would I be interested in doing? We're getting pretty darn close to that 57, which of course, as you guys know, was a recent all-time high, was a major breakout point, has been tested and confirmed as support. This should be strong. If this does give out, and I'm not saying it will, but quite honestly, I'm almost looking for it to at this point in time. That's kind of what it feels like it wants to do. But of course, it hasn't happened until it happens. Below that, I think you have to kind of take a step back a little bit from the utilities. They've been a really strong place to be, and this very well may hold. Like I said, it hasn't broken. This should be a strong level of support. Don't love it closing below the 50, but hasn't broke support yet. If we want to bounce off of this, it's going to have to do it without me. I completely would understand traders looking for buys off of this 57. I'm not saying off of this candle necessarily. That's a lot. That is a major breakout point. And if we look at this on a weekly chart, it's really not done anything. We're just continuing to test the breakout point, right? We broke out of a huge cup and handle on that weekly, had a nice little pop, and we're still just testing that breakout point. So I continue to just want to stay away from the utility sector right now. Still, if you made me do anything, I would go long above 57 because that is a lot of support, and that should be a tempting price. But luckily for me, you're not going to make me, and so I'll continue to be a spectator over in the utility sector. Over in healthcare, I mean, you guys know we saw that heat map, just a giant sea of red again in the healthcare sector. A lot of you guys I know are trading it bearish, whether it's the ETF or Humana or United Health or CI. I mean, basically take your pick. It's ugly, and I really have a hard time. I mean, looking at the ETF, we are now working into, and we kind of caught a little bit of a low. We do have a little bit of history here. Whoops, in this, in this general price range. That's not a tempting price, in my opinion, from a buyer's perspective, but maybe it could be a place to get some profit taking to come in. You did see some upward movement towards the end of the day on some of these things, a little bit of a tail or a shadow form on Humana, United Health, but then you have, things like ABMD that I know some of you guys are probably working with as well, and I can't talk and type at the same time, showing no signs of life after that recent breakdown. And it's, we've talked about it's across the board. It's the hospitals, it's the Lillies and the ABT, like Matt was talking about in the halftime report. I don't think they had a bad earnings report. If you made me say if it was good or bad, I would say good, but it doesn't matter anymore. Not right now, at least in the healthcare sector. It is very beat up. And so at some point in time, a retracement or at least some bearish profit taking you would think would happen, but I have a hard time thinking it has to be tomorrow with how ugly these things look. I mean, it is just nasty, and the good ones, for a long time, medical devices, they were hanging out all right. The manufacturers were doing okay. You have Lilly's and Abbott's and Merck's in strong trends, and now all of a sudden you have this. And maybe this is going to present some good opportunities for us a little bit down the road when this shakes out on some of these stocks. And again, this is going to be subjective. Some of these stocks, I mean, I like Abbott, I really do. And I'm excited about a day down the road where I'm getting it, an opportunity to get it at a cheaper price. That opportunity is not tomorrow. And if it is, it's not for me. So it will be. I mean, we're seeing everything taken down, right? And I have a hard time believing that everything in the sector has lost this much value. It's probably not the case. But that is what the price action is doing right now. It is very clearly bearish. It will open up some doors for us a little bit down the road for some of these companies, for some potential bullish plays. But that might be next. Well, I don't see how it could be next week for me. It might be next month, and it might be months and months from now. I'm perfectly all right with Abbott pulling back to its 200-day moving average over the next month and going from there. Just continues to be terrible. Nasty. At this point in time, we got a little support where we're at right now. And we got a little bit stronger, maybe support down here at around 84, 83.50. But man, how do you want to buy this? I would never want to buy this. I don't think anybody I know would want to buy it either. So we may not want to go bearish any longer because of how extended to the downside it is. But I don't know anybody brave enough to call that bottom. So we'll see where this one takes us. But ugly. And then we have discretionary, held its own today, much like the market. After you look at healthcare, everything's boring, but much like the market, up on the open, filled throughout the course of the day, closing up on the day, not a particularly great looking candle, a little bit of a gravestone doji looking candle, but we're above everything. I mean, now just like that, we're so, I quote unquote, so far beyond the breakout point that it could be pretty easy for it to pull back, get a healthy pullback, and still test that old 118 zone as support. I do think that's the primary level of support that you're looking at here in the discretionary. I continue to like it. I have a hard time seeing how somebody else couldn't. I always try to think about the other side. I always like to think, well, why would somebody take the opposite of my trade? And I have a hard time seeing it right now as a whole throughout this sector. You even had Nike today, and we've talked a lot about them as of late, but they technically speaking broke out today. They took out that high here today. So I don't really love it as a new trade, at least with where it is today. But you have to call it a breakout. Breaking resistance is not an easy thing to do. It just continues to be a very, very strong place. Then real estate continues to be volatile. It was an interesting day to say the least. We tried early. We started coming off of that 50-day moving average for a minute on today, but basically, right off of the open, just selling, and then we had that nice little retracement. It looked like it was going to close back above that 50-day moving average today, but then the last little bit of the trading day, it looks like what these probably were scalpers day trading, buying in a little bit. And unlike what we've seen time and time again as of late in real estate, that they were not giving it the benefit of the doubt. I would assume that was a lot of short covering, although obviously you can't know that for sure. I would assume that that's what it was. Closing below that 50-day moving average, I think you have to say that's a little bit of a bearish signal. I still don't believe it's enough of a signal to warrant a bearish read on the real estate, more so a more neutral type of read. Looking at the weekly chart, this is, again, kind of like utilities. We had this break. I don't think this is quite as interesting, because really, if you think about utilities on that weekly break, they're just consolidating on the breakout, right? This had a nice run, and a pullback to that breakout is perfectly fine and reasonable. A pullback to that breakout all in one fell swoop, not perfectly fine and reasonable to me. I do think that's kind of our primary support level. That's going to put us right around 34.80 or thereabouts. And so for me, I'm still looking at this, not as bearish. I'm not really interested. It really needed to show some strength off of that 50 today to make me at least moderately interested. I don't think that it would have been enough to sway me, but to give me at least a reason to think about it. It needed to show something there. It falling through that, showing very little willingness, that just scares me. And maybe it shouldn't, and probably it won't. Probably it shouldn't, actually, but it does. When you look at some of these, and we're some interesting places on some of these major REITs. And hey, Jimbo, good to see you, my friend. We're hanging out at support on AMT. We did breach it on the intraday, but we held on the close. Very important. You have SPG bouncing off of its 200-day moving average. That should be tempting. Buyers came off of that 200-day moving average on several occasions in the recent past. You have CCI. They're right above their 50-day moving average. You have Prologis. Maybe they're holding up a little bit better, but they kind of have a pretty little significant resistance zone here to prop them up. PSA testing support. So, a lot of these things are right knocking on the door of either support or the 50 or the 200-day moving average. And you have think about poor Welltower here. They do a little bit in the healthcare and their real estate. Oh, goodness gracious. Same thing with HCA, EQR hanging out at the 50. So these individual components are at support levels or moving averages that at least should be moderately intriguing to the bulls out there. I'm not interested. They're not intriguing to me, but I am interested in seeing if the bulls will actually try to buy off of these levels. If they're not willing to do that with as much strength as we've had, I don't know why it is, but I don't really need to. I'll just say if the real estate buyers who have been treated so fantastic all year aren't willing to buy at these major moving average and support zones, why in the world should I be? Right. So we'll see where this one goes. I'm not loving it right now. I still don't think we can say we've got clear bearish signals other than short term. Obviously, I think you have to say they're short term bearish signals, but I don't think they've changed trend or anything just yet. And lastly, communication services continues to just do what it does. The video game stocks again just took a horrific beating. They are the healthcare sector of XLC, breaking support. EA in particular just showing a lot of weakness. But then you had Google that actually held up all right. Just Netflix that did well. We'll look at Netflix just because it's fun. Google actually took out a little bit of the swing resistance here today. So, I mean, this really sums up the sector. You look at Google breaking a little bit of resistance, showing a bit of a bullish signal. You see EA breaking support, showing a bearish signal. And you see Netflix after an earnings basically just still in the same trading range it's been in for weeks on end. Continues to be that kind of a place. You guys know where I am at with this. The sector really doesn't interest me. Individual components might, but collectively, nope, not yet. And just another day for me to say that tomorrow. So, a little bit more of the same for the most part. You kind of think about it all the way through, and it's just a lot of extension of yesterday's activity in the market. Little light on the earnings going into tomorrow. We'll really pick up here next week. We'll get back from our holiday and we will be ready to rock and roll with some earnings. VIX, a little bit of a spike up here today as well, as it seems like, yeah, you know what, maybe we should take profits. And that's kind of the vibe I get. It's tomorrow's Thursday. I've got a 3-day holiday weekend. I'm going to be doing things that aren't going to allow me to think a lot. Maybe I just want to lock in some profits. I could understand that argument, and I'm not even leaving town. So I imagine folks that are at least contemplating that as well. Over in the dollar, dipped all the way back into that 50 and actually used it as a springing board here today. Didn't really go anywhere and didn't change our trend by any stretch of the imagination to me. But we're seeing movement. I mean, again, this has just been a swing directional traders, not their favorite place, unless they're clearly selling at the top and buying at the bottom. Anywhere in the middle is just this particular swing has been a little tricky. We continue to drift ever so subtly to the downside, working closer to that support, but we still are holding up, this 50-day moving average. Still, I want nothing to do with a chart that looks like this from a directional point of view as a swing trader. Intraday trader, yeah, they're probably loving this. That bounce off of the 50-day moving average. I don't know if Cody was playing the dollar or not, but if he was probably keeping a very close eye on that when that happened. But me, nope, I'm just still waiting for an eventual break. And I think there's a good chance that we get it, but until it's happened, that's all that is my worthless opinion. And that's what I'm looking for, and I will get it or I won't. Gold, interesting day today. Of course, we broke and closed a hair below that 1280 yesterday. A little bit more downward movement here today, giving a little bit more confirmation. I think you can call this close, second close below 1280 confirmation to the downside. If you look at this on an hourly time frame, we kind of had that initial drop that took us below that 1280, that little rally, and now we're kind of using this recent floor as a little bit of a ceiling. If today's low gives out, I would expect some traders are going to look at that as a bearish signal. And there really isn't a lot of support depending on where you're looking at, I guess. But to me, I mean, where's the next place to buy? You could have tried to talk me into buying it right above 1280, just from a pure risk to reward point of view. You probably couldn't have won, but you could have tried and I would have listened. But below 1280, you couldn't convince me if you tried. There's really nothing to prop us up until we work into this 55 to 60 range, which is we had a little bit of resistance here and back here. It's our 200-day moving average. I expect with a little bit of nudge, it's not hard to see the bears start to come in to gold personally. Going a little back and forth would not be a bad thing by any means. On the bullish side of things, I guess, I'm not really planning on thinking about it, but for me, it's way up here before you could even entertain some bullish notions, just above that 1310, 1312 swing high. So I'm not liking it. I really like the price action today. If you are someone who wants to swing trade gold to the bearish side, you can't complain that it didn't give you an opportunity to get in, right? Now, maybe in hindsight, you won't want to have taken that opportunity because it'll fake you out or whatever, but it gave us an opportunity. If I wasn't sold yesterday, now I have to make some decisions today, and it's okay either way, but at least I get the opportunity. It didn't run all the way down to 1265 and I say, oh, I missed that break. I don't even get to think about it. Then silver. Man, silver has been an interesting watch this week. Another very volatile day. Actually broke back above 15 on the intraday, failed it, of course, closing below 15 again here on this chart. If you look at this, and we might have to go into, let's try something out here. I think if you're thinking about silver below 15 as a bear, you're almost starting to see this trend line develop, over the last 3 intraday lows, as a potential. If that breaks, that might be a signal that we could look to move in to, because we have established a little bit of a trend here. I wouldn't dare buy into that trend, but clearly other people are braver than me and currently are doing so. So if we do take out that trend, I think we could call that a little bit of a bearish signal. Probably an easier and cleaner signal is going to be breaking the actual low, though. If I'm looking at entering from a bearish point of view, those probably would be the 2 things I was looking at. From a bullish point of view, well, now we can drag this thing down here, and we're going to get some pressure soon. Maybe we'll run up and test this. All right, who knows? It's made a higher high today. It didn't hold it by any means, but it did break it. Still, as long as we're keeping this downward trend line, have a hard time thinking it makes a lot of sense to be bullish. It breaks that trend line, and that is not my style of trading, but at least I could understand where a bull was coming from. But I think from a bullish perspective, as a swing trader, it's got to break this pretty established trend line now that we have here before we can start entertaining that. Realistically, for me, it would probably have to break 15.25 again, and I still probably wouldn't be interested. So really interesting movement. I don't think it's given us a clean signal, but again, it is giving us that opportunity. If we do look at silver as bearish below 15, we'll have nobody to complain to if a little bit down the road, right? Because that has certainly given us an opportunity. Whew. And speaking of opportunities and opportunities lost in hindsight, off of that double doji just continues to work. I mean, we crumbled through this old support level here today, working all the way back to 1250. I think at this point in time, we can now start be thinking, what's up with you, natural gas? Now, please don't do it tomorrow. I'm not interested in that happening tomorrow. This is a major level, and I want to see how the price action behaves. But a break below 250, I mean, that's a pretty bearish signal in my mind, no doubt about it. Very, very bad movement today. A ton of selling. Made sense. We were drifting down. We saw those signals together. But boy, that little support, and I know it wasn't a major level of support, but I mean, it didn't even look at it. It just said, nope, see you later. We're going to 250, and that's where we will make our decision. This is an important price in my mind. I don't think we have a clear signal just yet. Obviously, we have not broken that down by my standards by any means. And again, from a bullish point of view, can't be surprised if buyers are tempted to get in here. I mean, if you think about this nasty 2-week drop, I mean, just think about how crazy this 2 weeks was. And then just like that, folks started buying it. Huge downward trend, hit 250, folks just started buying it. So I think we have to respect this 250. I don't know that we're going to get a signal to, if we want to buy off of that 250. I know I'm not getting a signal that would be interesting tomorrow. But if things can churn a little bit, then maybe that can be a little bit different. Break below, I think you have to call it a bearish signal, whether you want to or not. I think that's a pretty significant break if it does end up happening. And lastly, over in crude, we took another run. At this point in time, crude on the hourly is about what you do. Took another run right up to that resistance. It looked like it was going to give it an honest shot of a breakout here today before, saying, nope, not today, and really kind of flipping back around. Primary support, at least short-term support. I mean, this 63, I think you have to really keep an eye on that. If you are looking at this from an intraday perspective, at least, major breakout, well, major, maybe a little bit of a stretch, but a breakout point off of that $63 mark. Two very nice tests and bounces off of that. Now that's a intraday play, if that, you're gonna have to be watching to even be thinking about that if and when it gets there. The easier play at this point is the breakout. I agree with that with Maddie. So hey, I'm glad that it's helpful for you. It's always helpful for me too. So I appreciate you hanging out with me while I do it, because now I'm ready to think about what to do for tomorrow. Just don't have to think very hard because of the 3-day weekend. So on crude, the signal really, I think the easiest one is going to be the break above this resistance. Now all of a sudden, I mean, it's weird how fast stuff happens. This is a nice little consolidation that we've had here. So we've had time. We don't need a pullback. We were pretty extended when we first got to this resistance level, or what turned into resistance. But now we don't even necessarily need a pullback to kind of take that breather. A break above that, I do think you call it a bullish signal. I do expect there to be more in the tank, no pun intended, when it comes to crude. If that does happen, up into that 67 marker, kind of that next level that I will be looking at, I do expect it to try. Hasn't happened yet, and it very well may not. If we do give out that 63, should probably expect a little bit of a deeper retracement. Is it to the 20? Seems logical as the next destination, which puts us at about $62. But I would expect that also is going to put us on this little 4-day consolidation low. I would expect if we do give out at 63, there is at least a little bit of short-term selling, because traders are just really comfortable with that number right now, right? So 63 and 65, the numbers to watch in the short term. If that gives out, probably a little bit of a deeper pullback, which would be okay. And again, could happen tomorrow. Preferably, we'll wait till Monday or something. So, ladies and gentlemen, that is where we find ourselves after, again, an interesting, market that we have. We look at the indexes, we're not seeing a lot of activity. We look at individual components, we're seeing plenty of things making some moves. Healthcare just an absolute disaster right now from a bullish point of view. Now, I know that none of us are bullish on it, so it's either darn it, I should have, or hey, things are going well, right? None of us are saying, oh, what have we done? And that's always a good thing. So at least I hope that we're not a little more weakness in the REITs than I would like to see. I don't think any clear signals at this point in time, but and I want to see that next wave. I want to see those buyers come into REITs, because they're going to. Where and when, I don't know. But, at some point, someone's going to say, okay, this is stupid. Let's buy some REITs. I want to see what kind of conviction they have when they do start buying into it. That might be a little bit telling. Plus, it'll give us a support level to watch. If it breaks, then we'll know where to go bearish, right? So we need that one to happen first. So we'll see where this one takes us. I mean, hopefully tomorrow, a little bit of a laid back day. I wouldn't be surprised if that's the way it goes, although you obviously can never know. Got a nice 3-day weekend, the nice way to let us just mellow out tomorrow and then go into Monday after a holiday weekend fresh. And you're very welcome, Scott. And yeah, not a whole lot, YouTube Marie, not a lot right now. Although you are seeing, we keep an eye on Lynn here. You are seeing a little bit on Lynn. We had a little hammer candle here yesterday form up off of the doji. Little higher. I would have much prefer it was at this support or this resistance level, but we saw some upward movement, and where we got into trouble was at the time our 50 hourly moving average. So, not quite there, and certainly not as pretty as 3M to my eyes at this point. We probably need a little more of a pullback on that. Now I'll be doing a little extra scanning tomorrow, so maybe tomorrow I'll have a few more interesting pullbacks for you. He's going to throw off my schedule a little bit. I'm not used to Fridays not doing things in the market, but I'm going to try to do them tomorrow. So maybe I'll have a couple interesting ones for you. Another one that interesting, and again, not nearly as pretty. I mean, there was a lot of good stuff to like on that 3M chart last week. But we did have a nice little pullback hammer candlestick on Urban today, right at that 50-day moving average. Not nearly the momentum on 3M that we're seeing there, but there's a pullback if I want one. So they're out there for sure, Jimbo. They can't all be as pretty as 3M, unfortunately. But believe you me, I ever find something that looks at the textbook like that, I'll be the first to share it with you. I'm not greedy about that. So thank you so much for joining me, ladies and gentlemen. As always, it's more fun to do this with you guys than on my own. So thanks for hanging out with me while we go through the daily routine. Of course, if you are new around here, be sure to subscribe and hit that notification bell, and be sure to join us over at Tackle Trading on Twitter. You can find me at Frank Martin23 on Twitter as well, and I'm never too terribly far away, so don't be afraid to say hi. What we have, the bear market survival guide. No iron condors tonight, right? Cash flow condors tonight. So all of our cash flow condor team members, enjoy that, getting in there with Tyler, building that one out, it sounds like. So have fun over there. And of course, if you're not a pro member, you know the drill. You're always welcome and invited to come on over to Tackle Trading. We'll get you set up with a 15-day free trial so you can see what we're all about. We'll be doing our scouting report meeting tomorrow, so we can get everybody their scouting reports early so they can enjoy their holiday weekend as well. So thank you so much, ladies and gentlemen. As always, it is my pleasure. Thank you so much for your time. You guys get out of here. Enjoy the rest of your Wednesday. We will see you same time and channel here tomorrow afternoon. Thanks, everybody.